Good morning and welcome to our Ashworth Wealth weekly market update. My name is Scott Thomas. Just had a couple of thoughts I wanted to share with you this morning. There was some good news in the markets last week. The markets responded positively, and I just wanted to kind of go through and talk about some of the good we're seeing in the market right now and maybe a couple other things that we're a little bit concerned about. Let me start with the good news. The good news is on Wednesday, there was a press conference and the Fed announced that inflation was largely under control. Doesn't mean it's completely under control. It doesn't mean it's where they want it as of right now, but is a step in the right direction. Because of that, the general feeling is there will not be an interest rate hike between now and the end of the year. Most everyone, most economists, we included, we thought that there would probably be a quarter point hike between now and the end of the year. It looks like that will not happen. And because of that, the markets reacted positively. However, there are a couple of things that they also brought up that are still a little bit concerning. One of these I wanted to share with this graph. There's still a lot of upward pressure on wages and salaries in the economy. It's shifts in the labor market continue to concern the Fed. Basically, what this graph shows is it is a comparison of wages and how they have responded relative to inflation since 2012. Wages and hourly incomes are still higher than what inflation is. That is a concern to the Fed, and that is another reason why there may be another quarter point hike. Won't happen most likely by the end of the year like we thought it would, but if this continues, that is another thing that the Fed is concerned about, and there may be another quarter point hike sometime next year. The good news, however, and this is what I wanted to kind of concentrate on, and again, we take this with a grain of salt. It was a 1 week, and the markets largely reacted just on the thought that there won't be an interest rate hike, but there was some good news. The S&P 500 added 5.9% last week, the best week of the year. The Dow Jones Industrial Average rose 5.1%, again the best week of the year, and the Nasdaq jumped 6.6. So all of the indexes reacted positively to the news or the perceived thought that there won't be an interest rate hike by the end of the year. Another thing that we look at very carefully, and we've followed this for years, is as companies are reporting earnings at the end of each quarter, it's very interesting to see how they report and how those numbers come back. So I just wanted to share a couple numbers with you. This is something that we were happy to see. 82% of S&P 500 companies that have reported so far have reported positive earnings per share. That was a surprise. That's higher than what analysts thought that would be. Also, 62% of the S&P 500 reported positive revenue. In other words, revenue is growing. That is a number that was a surprise as well. Most economists believe that that would be a lower number. What that tells us is people are still spending money, companies are still making money, the earnings per share has gone up. So there is some optimism. However, that's tempered with there still are reasons to be concerned about inflation. So through the end of the year, we hope that we will continue on this trend and won't see any more interest rate hikes. And then next year, it'll be very interesting to see what the Fed does, what happens with the labor market, what happens with interest rates, what happens with inflation. So it's going to be very interesting to see. And we're going to continue to watch and continue to do our weekly updates. Again, grateful to be able to share some thoughts. Please give us a call if you have any questions on this or if there's anything else. And we look forward to your feedback on these weekly market updates. Thank you.